Coming up, keeping an eye on oil outlook for oil prices this season as crude oil has tumbled. It is now at a 17-month low, down 1 2/3% at $45.14 a barrel. Welcome back. What a ride oil prices have been on. Take a look at this chart that says it all. Crude oil down 24% this year. It is raising concerns about energy companies and their profitability levels. There was major fallout for the industry after the price decline back in 2014, you remember, over corporate debt. Joining us right now is the Gordian Group President, Peter Kaufman. And Peter, it is always a pleasure to see you. Thanks so much for being here.
Thanks for having me, Maria.
What do you think about the price of oil? Is it telling us that there's a global slowdown on the horizon, or is it just about oversupply? And what are the implications here in your view?
Well, the causes are a little tough to ascertain, but I will tell you that the companies that back in 2014 and 15 that utilized a trick foisted on it by Wall Street to, instead of dealing with their debt problems, they made them worse. And so you've got companies today that are whose shareholders are reeling because of it. And essentially it was this. The Wall Street investment banks who work for companies and also work for financial creditors told companies, you know what, don't take advantage of the bond prices, which are signaling financial distress. Don't take advantage of the creditors while you've got them on the ropes. And instead, they said, do a secured debt swap. So they gave secured debt to unsecured bondholders. Admittedly, a little less face amounts, a little longer maturity, a total bet on oil prices doing nothing but go up. The piper is now being paid because prices are down, and you're seeing Denbury and Chesapeake, whose stock price is half what it was when they did this exchange, and then you've got Mid-States and Rex Energy and Lynn, whose shareholders are being wiped out in Chapter 11. Right. Didn't have to happen. At Gordian, we only represent boards looking out for shareholders, so we're unconflicted, and we would always advise a company, when your bond prices are down, take advantage of them. Don't roll over and improve the creditor's position at the expense of the shareholders.
Mike.
Hey, Peter, so now with oil down at $45 a barrel, aside from the energy companies that are directly impacted by that, do you see that as a credit for the U.S. consumer, as extra money in the pockets of consumers in the United States?
I do. What's good for the consumer is bad for the oil companies in many instances, and this would certainly be the case. Down prices are good for the consumer.
One thing I'll add, Maria, there's a story in the Wall Street Journal that there's been so much talk about this 40% slide in oil since October being oversupplied by shale producers, timid production cuts by OPEC and the like. But it's also signs that demand, particularly coming out of Asia, is weakening. China, India, and other economies across emerging Asia, that's the source of 2/3 of global oil demand growth. It is slowing. And that's one of the things factoring in this the kind of continued downward spiral in crude prices.
Yeah, and that's what oil indicates. That's what was my first question, Peter. Is this indicating a slowdown that perhaps is persisting worse than we thought? Real quick, Peter, final word.
I think it is.
Good to see you, sir. Thanks so much. Thanks. Peter Kaufman joining us there from the Gordian Group.